What is up, everybody? Today is Monday, January 13th. Today I had a winning day. Although the price action was pretty tough in the AM session, but overall I came into the market with a bearish bias. I had a feeling that we were going to end up dropping to the low that we had here on November 19th from last year. You could just tell that price is obviously trying to hit this with speed. So as you can see, right, we're just dropping very aggressively here. Now, with that being said, I have noticed that we did not retrace back up into premium off of this price leg. So I was thinking that we were going to drop into this level first and then come back up into premium, reject off of that to then either figure out if we're going to go lower or if we're going to end up going higher. So, yeah, that was mainly my bias for today. We wanted to go short. And on the 1 hour, we saw the same kind of sentiment, right? We have price coming down, we've got a little bit of retracement, and then it's just a slow trickle on down overnight. Now, the one thing that I was keeping an eye on this morning was this 1 hour fair value gap. From this high to this swing low, it was sitting within premium. So it was a very good place for it to come up into and reject off of and then target the low of day, and then also that draw on liquidity that I had at 679.75. So today I did a first that I've never done before, which was to take a trade in the pre-market during the first AM session macro from 850 to 910. So we know that price wanted to come lower, and as you can see, we tapped up into that 1 hour, rejected off of it, came back up. Now within the macro, we start to come on down even lower. Now the entry that I had was right here, but the reasoning behind it was the fact that we had this 1 minute fair value gap get invalidated, but then reclaimed. So a very weak closure, just showing weakness. Price coming on up, and then as you can see, we have a 1 minute bullish fair value gap right there that gets invalidated, and then we get a strong displacement lower, which takes out these lows, which I considered a market structure shift at that point. And we start to trade back up into it, and I market order in. Put my stop above this swing high right there, and my target is obviously that 679 level. Now, as you can see, price starts to move lower, and then we come into the open, and we get some very strong pushes down. Now, here is where I did not do the right thing. At this point, I ended up with a 1 to 3.24 risk to reward trade. I should have taken off something. I should have taken off some profit here at this low. As you can see, we came, tapped into it. I was thinking about it for way too long. All I kept thinking about was how nice it would be for price to come all the way down here and be able to give me a really fat P&L for the day, which was the wrong approach. Greed had gotten into me. Now, I didn't make the same mistake I did last week, which was to leave it back at my regular stop. I actually moved it slightly into profit. And, as you can see, the price comes on up and stops me out very quickly. Now, I wait for the next setup at the 950 macro, which I got stopped out on, but I wanted to see what was going to happen after the 10 o'clock open. As you can see, price comes on up, displaces down lower, moves back on up towards the 10 o'clock open, and as it's approaching it, I actually take it outside of the macro. Again, another short, trying to target lower. We reject this 1 minute fair value gap, and that was a very good sign for me to want to go lower, but we start to fail coming down to this fair value gap. So at that point, I moved my stop to break even because I did not want to stick around and play too much with this price action, as it was not ideal. And as you can see, price then comes back up and stops me out, and we start to go back above that 10 o'clock. And at this point, I notice we're taking out lows, we're taking out highs, we're taking out lows again, and we're taking out highs again. And then we are rejecting off of that very strongly and then taking out low. So I was like, you know what? This looks like a search and destroy kind of morning. So I decided to skip this macro session here between 1050 and 1110, but there was a setup here, an inversion fair value gap, taps up into it at 1056 and put your stop above the high. Now this one was tricky because it starts to move right back on up. Obviously your first target would have been here, but after this creation of this swing low and then very strong rejection off of it, you could have taken off partials here, which would have been a 1 to 1.78, which still honestly is not bad. So partial taking would have saved you today. I've been trying to hold full, And so that's why, you know, I end up getting stopped out at break even, which is not good. I was up a good chunk of change here. I was up a decent amount here too. Let's take a look. What was the most I was up? It was a 1 to 3.6, 1.36. So not bad. So, you know, greed, stopped out at break even. So W, risk management. I didn't take this one. I took the 1150 macro here. And on this one, what I ended up doing was actually taking off a partial down here, just because I wanted to secure something. It was a terrible RR. So as you can see, it was a 0.61 risk to reward. And I didn't care. I was like, you know what, whatever. This is gonna. I was actually done after this, but I was like, you know what? It's rejecting very nicely, and it created that inversion fair value gap there within the macro. Everything was aligning, so I decided, yeah, I'm going to end up taking this. And then on top of that, you know, we were holding the 15-minute IFEG that we created too. So going back to the 15-minute time frame, that's why I ended up taking these shorts as well right here, because price tapped up into that 15-minute IFEG, and that's why I took that short. But then that obviously got stopped out. And yeah, I mean, it just overall the price action was looking bearish. It kept sweeping the high, and it was failing to really displace through it. So that's why I still felt short were the move. And yeah, you know, I moved my stop to break even after taking off that swing low right there. So not the best execution on that last one. I still ended green, but I don't like it. I'm not happy with it. I'm not happy with my performance at all today. Here, I definitely should have taken off some right there. Here, I should have taken off some right there, or even at that swing low right there, or moved, I don't know, something, you know? And then could have taken this one without hesitation. This one, you know, it wasn't ideal RR, but I am happy that I did take it, but still, you know, I'm like kind of conflicted. Now, going into the PM session, we're coming back up into this area here. So why did I switch my bias for the PM session? Well, you can see price is creating higher lows overall, right? And it's sweeping the highs, but failing to displace lower. Price is up in OTE, rejects, back up in OTE, rejects, back up in OTE again. It is not trying to go lower. And if you're trying to fade this move, you're going to get burnt. So at this point, I wanted to look for long entries. So at the 115 to, or the 110 to 145 macro. So right here at 110, I'm looking for a bearish fair value gap to get invalidated, which it did right here. Price stops into it, put your stop below the low. And then my target was this high right here. As you can see, from the origin point of this drop, it was this swing high right here, and it looked like it was trying to recover to come back up into it. I was not afraid of that draw on liquidity down there because, you know, if we really wanted it, we were so close, and price kept failing to take it. So at that point, I was bullish. There was really nothing else that would change my mind. So then at 110, yeah, take that invalidation right there. You could have taken this one as a more conservative approach if you'd like. Less RR, obviously. Would have been to 1.4, still pretty good. And so yeah, price taps on up. You could have taken off some partial here at that high potentially. Let's see what that would have been like. A 1 to 1.39. Not bad for a first TP, especially with it being such a weird day. So that could have been a good place to take a partial, put your stop to break even, you would have gotten stopped out. If you held it and then you see that it created a new high of day, you could have taken a partial there and then stopped out. You know, this price action gave you many times to realize that, yeah, this is not trying to go higher. It is sweeping the highs. It's wicking the highs. And then here it failed to make a high. You definitely should have moved your stop to break even at any point here. You had not just 1, 2, 3, 4 opportunities to get out at break even before ultimately getting dumped on. So it looks like price wanted to come back down lower. And the reason why I even looked for this long too was there was a 5-minute fair value gap right here. Now this trade right here was not in a macro. I did see it though, based off of quarterly theory. So as you can see, we've got accumulation here in Q1. We know that the draw is higher, so you want to see Q2 manipulate lower, taking out these lows, which is where that initial long got stopped out. You know, this was the manipulation cycle. Took out those lows, and then you look for a bullish setup here. The real entry probably would have been this right there. You wouldn't have probably gotten tapped in. You could have market ordered in there, and then your target would have been the high of day. Price comes up, takes out this high, move your stop to break even, and it just fluctuates for a bit until eventually hitting. Now let's say you don't want to trade quarterly cycles, right? You want to just trade only the macros. So let's turn on the macro indicator here. New York last hour, you're looking for a bullish setup. Here's a big drop, taking out those lows at the start of this here, right? Takes out this low. Here is the FEG that you're looking to get invalidated. Gets invalidated with this candle right there. Put your stop below that swing low, target the high for a 1 to 1.4, and you're in drawdown for a bit, and then eventually one massive candle brings you to your take profit. And as you can see, price continued to move on higher in the after hours, but regardless, good trade, good trade. This could have been managed well and still have been a good trade. You could have taken some partials, although no full TP hit on the shorts. They could have won anyway, and these were all fitting within the narrative of the higher time frame, so I don't think they were bad trades. They just were unfortunately not towards the draw. Here, this one also not a bad trade. It just wanted to take out liquidity one more time before truly moving up into where it wanted to go. So hopefully you guys ended up with a good day. You know, lots of good setups in this unfortunate chop. You know, it was just chop, moves, chop, move, right? It's accumulation, distribution, accumulation, distribution. So, like I said, hopefully you guys ended up with a green day. Definitely a rough day, but let's see what the rest of the week brings. Hopefully it is better. Today was a no news Monday, so this price action was pretty obvious. So yeah, guys, I will see you all tomorrow. Peace.